Okay, hello everyone, and welcome to this weekly trading roadmap. I'm Miltos from Futex Live, and we're going to be going through a pretty jam-packed week this week. The week starting the 30th of November. So, the last day of the month today, and we've got some pretty big events ahead. So we're going to try and get through this as quickly and swiftly as possible. We're not going to try and take too long going through this. So. The main things that we're going to be looking at this week. If we start off with Monday, we're going to start off, as we always do, looking at our weekly events and putting them into context with the risk allocation that we would give accordingly. So just bear with me for 1 second. I'll just get a little pen up so we can draw. Here we go. Okay, perfect. So, first things first, Monday, we've got the German CPIs, US Chicago PMI, so that comes in just before we get the month-end flows. We've got the US pending home sales as well. The main event of the day is basically the month-end flows. So, for those of you that are trading on price ladders, for those of you that watch price action, very much a great day to get involved in the market. There's some good flows towards the end of the month. Month-end extensions in bunds, not only in bunds but on the pan-European curve, we've got about plus 0.4 years of duration being added to the curve, which, to be honest, is probably below average. Average figure is probably 0.07 is probably an average figure. Anything above 0.09 to 0.1 is probably big. But we're probably below average on the extension, so I'm not expecting fireworks on the month ends. Having said that, last month, especially if you were trading bunds, the month end flows were actually quite pertinent and strong coming into the close, between 4 and about 4:15. So just bear that in mind. Also, obviously, for those that trade the FTSE, the S&P, the T-notes, there's going to be hopefully some good flows in those markets as well coming into the close. And even on the FX note, please do note with the FX, we probably have some really extreme positioning coming into both the ECB and the Fed, so do bear in mind if some players want to take some profits for whatever reason, we might start getting maybe a bit of a dollar pullback and some euro strengthening. Just bear it in mind. It's something to keep in mind. It might not be the case. Maybe people might use the liquidity to put even bigger positions on, but it's something in the back of my head. If I start seeing a bit of a euro bid, I might play with that. Overall, I'm giving myself a 12% risk allocation. I usually do it on 5 or in digits of 5 or intervals of 5%, but I'm doing this a little bit more quirky this week because the majority of my risk allocation is pretty much towards the end of the week, and we'll take a look at why in just a second. Coming on to Tuesday with the Chinese PMI manufacturing, so just do bear in mind this is, even though China's kind of fallen out of the headlights and it's kind of faded into the background, the index there somewhat fell off. We've had some news out from China as well recently with their brokers. So do keep that in mind. It's something to just keep in the back of your head because this was all very hush-hush until it just kind of bursted to the forefront, and then we saw this extreme volatility regarding that during the summer. So keep in the back of your mind, if we get lower prints again, contractionary prints, that could force some of the investors' hands to the sell button. So that's something I'm taking a look at. Overall, not much to look at. Big events in comparison to what we're seeing the rest of the week. We've got German PMI and unemployment, European PMI, UK PMI. We've got European unemployment. We've got the US PMI, construction spending, and ISM. This is probably quite a big one. I should have boldened that up. We also have the ECB speaker of Visco, relatively dovish. The BOE's Carney, the head of the BOE, so just keep in mind what he says. And the Fed's Evan. Overall, in comparison, this is all relative terms. On any other day, this would probably be medium, but I'm giving it a low relevance just because relatively to the other days, it's not as relevant to my trade plan. So I'm giving myself an 8% risk allocation for this day. I'm not really looking to put all my chips on this day. Plus, being as the Bund is my main market, just to put that out there, the Bund is rolling from the DEC contract to the March contract, as we are currently moving into December. Please note with the rollover though, we've had, previously, about, past year or so, we've been generally or traditionally been rolling by the ECB. So the ECB is on Thursday. We've been rolling by Thursday, but in the last couple of rolls, actually, we've been rolling after the ECB, and sometimes even the next week. So bear in mind, we might not roll by Thursday. We might roll either Friday or maybe next Monday. So just bear it in mind. Keep an eye on both contracts and see which one's doing the most volume. As soon as you see the March contract doing more volume in the DEC, then just move into the March one, because once it does that switch, it tends to move really quite rapidly. Moving on to Wednesday, we've got the European CPI, PPI, with the US ADP, just a bit of a forelook before we get the NFP print. Then the Fed's Brainard, Lockhart, and Yellen, also Williams speaking, but this is the one I'm looking at. So we've got, I think, the Fed is next week, Thursday, and from what I know, a blackout period is about a week, so Yellen can still say something on Wednesday, which is the day before the blackout period starts. So do bear that in mind. This is something I'm keeping an eye on. If Yellen wants to indicate any sort of monetary policy stance, if she wants to make it clear, make it even more clear that they're possibly looking at a rate hike in the next meeting, maybe she can say that. If she feels the market's maybe overpriced it and maybe should pull back a bit because maybe they're not as close as what the market thinks, she might indicate that. So do bear in mind, obviously, the large majority of the market's positioned for that rate hike in December. I think we've got probably anywhere between 75 and 80% probability of that happening now, priced in on the Fed Fund futures. So just bear in mind, if she does come out and kind of shift that a little bit back, we might see some profit taking on some of those positions, especially if you're looking at some of the curve. Even if you're looking at, let's say, the 2s versus the 30-year, the 30-year versus the 2-year. And here, as you can see, I just pull that up for you guys. You can see we've had some really immense flattening on the curve, which means this is usually how they're pricing in these rate hike expectations. The yield differential is tightening because the 2-year is a lot weaker than the 30-year, and that has to do with, obviously, with growth and inflation expectations are kind of shifted or seen across the longer end of the curve, the 10 and the 30-year, and the 2-year obviously has to react more quickly to that rate. It's more sensitive to a rate hike, so that's why you're probably getting this immense flattening. So if we do start or actually see something out of the Fed's Yellen that kind of pulls that back, maybe we might start seeing a bit of steepening or some pricing out of everything that's come out. So just bear that in mind. That's kind of what we're priced in and how we're sitting at the minute. Moving on to Thursday, which is probably the biggest event of the week. We've got the German Service PMI, European Services PMI, UK Services PMI, and then the big one is the ECB press conference and rate decisions. Now, for this rate decision, we've seen a lot of pricing in, a lot of sources. The market's already kind of looking at a potential for a 2-tier deposit facility. We've seen this source out of Reuters last week. Possibly the inclusion of municipal and regional bonds in the QE. They've even talked about purchases of non-performing loans, which is something sounds pretty crazy. Basically that the ECB is willing to take that kind of credit risk on board. But in any case, if they're willing to do it, well, fair play to them. So overall, the expectations are that they are going to boost QE. They're probably going to extend it. Some banks have talked about them extending it into mid-2000. So right now, basically the ECB's told us that they're going to end in SEP 2016. The expectations are possibly for them to move this into mid-17, which means that as we currently stand, we're probably going to see another 500 billion euros of liquidity into the end of 2016. So this is 500 billion. If we move into the mid 2017, we're probably looking more along the trillion mark of extra liquidity adding to the system. Now, if that is just extending it, if they actually boost the number of purchases each month from 60 billion to, let's say, 80 billion, in this scenario, we're looking more along the lines of 1.5 trillion euros extra liquidity in that duration. So do bear in mind, there's all these little intricacies in your planning and your scenario analysis. Make sure that you've got all these scenarios down pat. You know exactly what you're looking for. There's going to be loads of detail, loads of technical terms that come out on the day, but for all intents and purposes, if you're trading this event and you want to maximize your returns, you've got to make it as simple as possible. Know exactly what you're looking for and just trade off of that information. And by God, just trade the markets that give you the biggest bang for buck. Don't trade a market that's going to be a gray area. You don't know whether it's going to go up or down. If it's a QE announcement and it's larger than expected than what the consensus is, I'm probably going to look to trade the Euro stocks or anything that has exposure to banks, anything that exposure to the equity markets, because it's going to be extremely risk on. Now with the bonds, obviously, I'm probably looking to trade more the belly of the curve instead of the longer end. The longer end, I'm not quite sure where we're standing on that, because inflation expectations are relatively relatively higher at the minute. Not exactly very low. So if we take a look at the inflation expectations at the minute, so this is where we're standing at the minute. These are the 5-year inflation swaps in the Eurozone. You can see they're not really that low. I mean, in comparison, actually, the market's actually trading at levels. These levels are pretty much the levels we were seeing back in April and May, where we saw a huge sell-off in bunds. Keep that in mind. We've seen, if you take a look at the curve, if you take a look at some of the markets, I mean, just the belly of the curve, the 5 years, the 5-year German curve has already broken the all-time low yield, has moved, even scratched that minus 0.2% threshold that the ECB's basically said they won't buy more than buy more of a bond if it goes to that threshold. That's probably why they're looking to cut the depot rate even more to give them scope to buy more on the short end. But nonetheless, take a look at the yields in the 10-year bund. These yields are nowhere near the all-time lows, so you can see that we've been seeing a fair amount of outperformance in the shorter end of the curve. So overall, quite a bit of steepening in the curve. So that's something to keep an eye on, guys. Just keep that in mind. I'm not going to trade a market. It's going to be quite a gray area. I don't want to stick to the bunds, even though it's one of my main markets. I'll probably look to trade either Euro or the 5 years, something that's going to give me a bigger bang for buck on the day. So that's the ECB overall. Also good to mention, the S&B has been intervening. Last time we saw that was on the 15th of Jan 2015. That was before the 22nd of Jan, which was the ECB when they announced QE. The 15th of Jan they dropped the peg, and then that was already the indication that they could potentially act on the 22nd. So ECB has already been intervening. Keep that in mind, guys, because that's probably indication that the ECB's told them, hey, look out, we're about to step in and launch our bazooka. So the S&P's, been sitting there trying to weaken the franc, the Swiss franc, coming into that. So that is probably why we're seeing such high expectations overall. Other than that, we also have the U.S. jobless claims, PMIs, durable goods, ISM, very important, and the Fed's Mester and Yellen. Obviously, on these days, not as important because we're in a blackout period. Moving on to Friday, we've got the German factory orders, construction PMIs, and then the big one, U.S. non-farm payrolls and unemployment. Keep an eye on this, guys, because if this is, again, another strong number, we'll probably see the expectations of a rate hike still sticking. If we see a much lower number than expected, or maybe, again, we might see some of that positioning unwind. So, again, it's kind of that two-way play from Yellen and the NFP print on Friday. We also got the ECB's Visco, Fed's Bullard, and Koch Lakota speaking. Again, like I said, blackout period, they can't say much. But I've given myself 20% risk allocation for Wednesday, 35% for Thursday, and 25% for Friday. All right, let's take a quick look over at some of the markets that we're going to be trading. First, I'm going to start with the Bunds, looking at the weekly profile. So, main thing that we're going to cover, obviously, is we've got a couple of low volume nodes. One at 158.53, which we've held today on Monday. We've got another area just in here between 158 and 11s down to about 158.00 really. This little area in here, which is quite important because those 158.11s is that previous weekly value area high just in here. And if we are starting to offer and you know, auction this area off, I'll be looking for a play at least down to these 157.81s, this high volume node in here, which seems quite key. But ultimately, the value area low of the week, 157.67. Now, for plays to the downside, if we do make our way lower and actually break these areas and use this 157.67 as resistance, you know, I'm looking for a test lower. Last week we mentioned our really key area. So we're taking a look at this really key area. As you can see in here, this whole region we mentioned was going to be really important. You could see weekly highs, weekly lows, selling tail area in here, a close and a high, and also really that value area high in here. So we said this whole region was going to be really quite important. We didn't quite get to the area where I was looking to buy around 157.0304, but nonetheless, that is the area to keep an eye on, guys, for the downside. If we breach this level and we can hold an offer below that area, you know, that is where I'm looking to get a little bit more aggressive to the downside. Until then, this market still is buoyant and looking bullish. So if we can get below this area, especially this value area high here, we think which is about 96.97, and hold, so break down, hold this area as resistance. In that case scenario, I'm looking for shorts to test these 156.33s. Just pure auction market theory. We're inside this value area. I'm looking for that at least. Overall, you know, if we can still hold an offer below that, well, in that case, you know, I'm really looking for a test of these really key zone at 155.76 to 70. If you guys remember this area, really key little zone. You could see again pretty key little pivot area in this region. Weekly lows in here, all splattered along this area. Value area low again at 76s. We've used that area. It's such a big area, especially those 71, 72s, which we broke on this day, and we saw really intense flows. So for that is probably an area to look to target if we're below this VPOC. I would still look to buy it, to be honest. If we get there, it's a strong support zone or pivot area, but nonetheless, that's what I'm looking for as a scenario to the downside. Obviously, to the upside, we would have to take out and hold above these 158.76s. Use this probably this low volume node as support before we attack this. I'm looking for the market to hold above that area and build value above here before we can actually start trending higher. So that's kind of the scenario analysis of what I'm looking at in the Bunds for next week. Or sorry, this week. If we take a look at over the Euro stocks, a little bit of a simpler job, just because we've been trending, we've held our buying tails. If you can see these areas, we've held to the downside. These buying tails in here, this huge buying tail in here, another small little buying tail in here, and now, if you take a look at where we're trading right now, we're kind of holding above last week's value area high, which comes in at 34.73. So overall, what we were talking about last week in terms of structure, in terms of what we kind of accomplished, if you take a look at the structure of last week, we broke down and we said to ourselves, okay, if we can hold an offer below these 34.18s, which we mentioned at the beginning of last week, which you could see we did a bit of pivoting around this area. If we can hold below that area, which we did in here, hold that offer, we should test lower and try to fill in some of that volume. which we did. You can see this volume is traded, it's filled it out, it's done its work. It tested this area. It didn't quite get down to that high volume node that I was looking at, but in any case, it did get down here, left a buying tail, and then we got back into this value area to trade higher and test that value area high just in there at 34.73, which inevitably we actually held at the end of the week. And as you can see, this week we're now holding this whole region in here. We're now holding that region. So 34.73 to about 72.71. Very key pivot for the week. If we can hold above that, the market is going to remain bullish in my eyes. That's just how I see the market. You could see we're easily trending to the upside, and we also said in last week's roadmap, not to repeat myself too much, if we can hold a bid above this really key big volume chunk in here and make value, we should be trying to test higher and inevitably trying to test in this really low volume area. We could probably try and fill out the really key area that I'm looking at for potential short if we get to 35.86 to 34.94. We've got a gap fill in here at 35.86, and we've also got a high volume node and value area high at 35.94. So for me, if you're taking the short at 35.86 or just below that, your stop has to be above here. In this region, you know, your selling area is essentially this area, and you're looking for a move back down into this region, hopefully to fill some of this value out. So depends how quick we get there. If we get there quicker than slower, I'm more inclined to take it. If we get there slow and we grind and we build a lot of value below here, then maybe I'm not as inclined to do much size on the short. I'm looking for a quick move up here. If we get a quick move to this area, I'm looking for the short. Otherwise, I'm not as interested in taking that trade on. So that's kind of the structure we have in the Euro stocks. These are the markets we're looking at. Very jam-packed week. I know I kind of went through that really quickly, but I like to keep this within about 20 minutes. And we've just gone a little bit over that. So thanks very much, guys, for listening. We've got a price ladder stream that I'm doing tomorrow at 12 o'clock. Sorry, and then I'll be doing my weekly market wrap on Friday. So for those of you that aren't subscribers, do subscribe. It's a free trial for 7 days. Check it out, and we'll go over what we spoke about at the beginning of the week and see if we kind of got the game plan correct and if we executed correctly on some of what we spoke about. If you guys do want to listen in on the ECB prep, we'll probably be doing that sometime on Thursday before 12 o'clock. I imagine around 11 o'clock. We'll be doing an ECB prep. Again, something you guys should definitely tune into. If you guys have any questions, or if you want to, just talk to me on Twitter about anything that I've talked about, my Twitter handle is at @MVS_Futex live. Great. Thank you guys very much for listening, and hope you guys have a profitable week ahead. Take care. Bye-bye for now. O'clock. We'll be doing an ECB prep. Again, something you guys should definitely tune into. If you guys have any questions, or if you want to, just talk to me on Twitter about anything that I've talked about, my Twitter handle is at @MVS_Futex live. Great. Thank you guys very much for listening, and hope you guys have a profitable week ahead. Take care. Bye-bye for now.